This is Rod Kusin, Spooman for Risk on Wednesday, October 13th, 2010. All times on the chart are Central Standard Time. We're continuing our array of different videos on our new strategy system, and we'll briefly discuss just some of the features of this system with you today and look at the entire day and the results that it brought. Our new indicator has the capability of doing a variety of different things. Number one, it gives us very specific indications as to where we need to enter a trade. It gives us indications as to where we believe the market will go. And we also have a provision for showing you where we believe the conditions are that might cause the existing trade to get stopped out. Now, we're not going to talk about that feature today, but we can look forward to that in future videos. What you'll see on the chart, and we'll just go through this first, wherever you see a white line, the white lines indicate, for practical purposes, a retracement, a very specific retracement back to a specific price. And these white lines will appear above where the market is currently. Magenta colored lines are below where the market is and where we believe the market will retrace to. We cannot determine when those events will take place, but we have very high probability retracement lines and have good confidence that these lines will eventually be intersected. Let's just take a look at a few examples of this before we look at our signals. Now here we are right at about the open. Before the open, we had retracement lines above the market. As we moved down into the low of the morning, we had just a few retracement lines that were hit before we headed up. But you'll notice all of the retracement lines that occur here were eventually hit. All of these that occurred prior to the open were in fact hit. Here and here. Then as the market continued on, this retracement line as well as this retracement line were hit. There they are again. These lines here, hit here, and that line, as you can see, still exists, as do these other three. Now we certainly anticipate the market will reverse perhaps tomorrow, and we'll see that though those retracement lines will eventually get hit. Now let's also notice a few things that happened during the day. Let's go back to the beginning. So we have a line down here, as we just discussed. That line was not hit as of yet. But in all of the other instances, these brief lines in here, here was a nice retracement up here that was hit. Down here, these lines, market rallied up real strong, leaving a few more retracements up here. Oop, just lost that. So of all of our retracement lines, yes, out of all of our retracement lines, of which there were 66 retracement lines shown today, 62 were hit. That's a 94% ratio. 94% were hit. It's a pretty good probability. All right, now let's look at our trade signals. Now when we opened today, our bias was short. So we were looking for short trades primarily, although swing trades can oftentimes be taken place with good success. But our bias was short, and we knew that before the open. The first set of trades that took place here went nowhere. But mind you, we had retracement points above the market in here as well as in here. So when they exist, there can be a need for discretion on the part of the trader. Where we have these retracement lines above your entry point, there's a little higher risk for those trades because of the strong probability that these lines are going to get hit, as we just mentioned. 94% probability ratio of being hit is pretty good. So while this is where the strategy, in fact, signaled our initial trades, and you can see that both by way of the indicator and the strategy, both are set, in this case, exactly the same. So when we get a colored bar, we also get a strategy signal, or an automated strategy signal. These went nowhere. But when we finally came up and we intersected both of those lines, again the strategy called for a short trade. Now we've got a little stronger probability. We're a little higher, more of a chance to get down to the targeted retracements below the market. Market did move down. Before it did, we hit a profit target here, and the strategy automatically took us out. Now again, you can set up this system to hit a profit target if you wish, or if you know where you're more inclined to take your profits, such as when the profit target is hit plus some additional potential profit based on a retracement, you might choose to exit a portion of your position and see if the market continues down. In this case, it did not. It rallied back up. As it did, it rallied up to where the next retracements are, and only coincidentally did we fire off short signals at that point. Now, we didn't fire them off because they were hit. The strategy, in fact, does not even know that those retracement lines exist. They are there for the purpose of visual reference, allowing the trader to use some measure of discretion as to whether or not he wants to take that trade. As it turns out, the trade succeeded, profit targets were hit, and here again there was a retracement line just below. So again, a trader might have the courage to go ahead and wait to see if that retracement is hit while taking at least some of his position off the table. We had another brief short trade that really didn't go very far. And then we moved up to this next retracement point. Again, coincidentally, we had trade signals at this particular time. Market dropped, we hit our profit target, and the market then rallied up again. Here we had a couple of signals here that really didn't go anywhere. This one got stopped out. We didn't really get a signal here for some reason. I'm not sure why. But as the market moved down, by this time, our strategy was also, the strategy bias had also changed. I can't show you this because it's historical, but our calculation indicated that by now we really ought to be taking long trades. And our first long trade took place here. Now we didn't change anything to take that long trade. That's just where the first long trade took place. And at that time, again, didn't really go very far. There was a brief target here. It was hit, but the market was still moving down. Then finally, after we dropped below this retracement point, we happened to have received another long trade at that point. That, of course, hit its target. There was targets above the market at that time. And then we started getting some of these short signals. Now we want to mention the bias was long. Whether a trader would want to take short trades when the bias is long is discretionary. Sometimes they work. Sometimes they work well. But all of these trades right in here did not succeed. Then finally, we had some signals up in here. The market did move down a little bit, but again, moved back up and continued to move up to this point where we finally received another short trade, which did hit its target. The market moved down, and now we had a few more long signals. They're right around 2 o'clock. That ultimately did succeed. We had a short trade toward the high of this move. Another short trade there that moved down nicely, and then a long that hit its target. This long trade hit its target. This went nowhere, as you can see, and this long trade also hit its target, and we continue to move up in the after-hour market. So, briefly reviewing what our strategy does, the indicator will paint the bar at times where we believe the market is going to pivot. The strategy can be set up exactly the same way as the indicator, so that when we get a green colored bar, we will get a long signal. A yellow bar will get a short signal. We can set up a profit target automatically for a certain number of ticks. We have very high probability retracement lines. Again, today's retracements were 94% accurate. And we also, although I can't show you this because it's after the close, we have automated alerts that tell us what the trade bias is. Either it's long, it's short, and accompanying the pop-up window that shows you that, there's also an audible that indicates what the bias happens to be. In our strategy trading system, we also teach such things as pattern of the day. And the pattern of the day overall was long, and we expected the high of the day to occur in the last half hour. As that did not take place, we expect that the high of the day will take place during the after hours market or tomorrow morning. The high was right here. Oh, pardon me, just a little bit before that. No, I'm sorry, that is the high right here. There was our high, and we fully expect that this high here, 1181, will be exceeded during the after hours market or tomorrow morning, one of the two. That's based upon very high probability pattern recognition. So that concludes this video. We're going to move into another video where we've adjusted our strategies to look at a slightly different set of parameters, and we'll take a look at how well that succeeded. So this concludes our video here. And by the way, we didn't happen to pick out the overall points for today. But just a quick look at our trade list for the day by the 15th trade of the morning, which occurred just around 11 o'clock. We were up $500 on one contract per trade, so that's not too bad. So in any case, let's move on into a discussion of our other strategies and how they performed. And we'll talk a little bit more about our settings in our next video. This is Rod Kusin and Spooman for Risk. By all means, we invite you to come to our website, RSKsys.com, comment on our videos, ask for a demo. We'll be happy to explain things in greater detail during the live discussion.